Okay, so I was cut off somewhere and around this area, so we're going to just start from this one from the beginning because I don't know exactly where it stopped. Allocated on the ratio of their capital investments. So the profits can be allocated based on the capital investments of each partner. So again, if we go back to the example that we're looking at, beginning capital investments were $30,000 and $10,000. So we allocate the profit based on this ratio. So we take the total of the two of all the investments, which were $30,000 and $10,000, so $40,000, and then we determine what portion each partner contributed. So $30,000 of the 40 and $10,000 of the 40. So 30,000 divided by the 40,000 is 75%, and 10,000 divided by the total of 40,000 is 25%. So partner A would get 75% of any profit. Partner B would get 25%. So this is based on capital investment, whereas this one is based on just they set the percentage. So they say 60% and 40%, for example. They just randomly select the amount. Here it's based on how much they've invested. The third way is allocated using salaries, interest allowance, and a fixed ratio. So we just looked a few seconds ago about what a salary allowance is. It's like it's almost like your salary for doing the work, but you don't actually get paid the salary. So maybe one person works in the partnership full time. Maybe one only contributes a few hours a week. So they come up with an amount that kind of works for a salary allowance to make up for that difference in how much each partner contributes. Then they also, each person might have contributed a different dollar amount to the business. So then they can have an interest allocation then to account for that. Then the rest of the profits of the business after they take into account the salary and interest allocations, the remaining profit might be then split based on whatever ratio they want. So we're going to look. Okay, so here, both partners agree. So partner A has their services, the amount of work that they're contributing is worth a salary of $40,000. Partner B, less experienced, so partner B, they are saying that the services that they contribute, partner B contributes, is worth $25,000. Then they agree to this. So this is what they have in their partnership agreement. So $40,000 and $25,000 as salary allowances. Interest allowances equal to 10% of each partner's beginning of year capital balance. And after that happens, any remaining balance of profit or loss is to be shared on a 3-to-1 ratio. So what happens when profit exceeds the allowance? So okay, so just reminding us here that the initial investment was $30,000 and $10,000, and the first year's profits are $70,000. So how do we allocate? So profit is $70,000, salary allowance of $40,000 and $25,000. So partner A has a salary allowance of $40,000, B has an allowance of $25,000. Interest allowance was 10% of each partner's beginning of year capital balance. So you look and see what they had at the beginning of the year, which they just started. So it was $30,000 and $10,000. So 10% of $30,000, 10% of $10,000. So then we add up and see where we are. So $43,000 here, $26,000 here. Added together, that's $69,000. So of the $70,000 in profit, we would allocate $69,000 of it based on this. That leaves us $1,000 left over. It says here, any remaining balance is to be shared 3-to-1. So again, how you figure that out is you add them together. 3 and 1 is 4, so 3/4 and 1/4, so 3/4 and 1/4. So one partner gets 3/4 or 75% of that remaining 1,000. The other partner gets 1/4 or 25% of that remaining 1,000, which is again $750 and $250 respectively. So that adds up to 1,000. So therefore we've allocated out the full 70. Partner A would get 43,750. Partner B would get 26,250. And then the journal entry, you would close out your income summary, debit, and you would credit each partner's respective capital account with these amounts here. So this kind of shows then what's happened. Invested 30, withdrew 20 during the year, allocated from up here 43,750, so their ending balance. And same here, initially put in 10,000, withdrew 18, was allocated 26,250 at the end of the year. It's closing balance. Now, what happens if the allowance exceeds the profit? What do we do here? So now we're going to assume that the first year's profit was 50,000, not 70. So we have our 50. We already said in the last one that the salaries were 40,000 and 25,000 for salary allowances. For the interest allowance, we said it was 10% of the capital at the beginning of the year, so 10% of 30 and 10% of 10. So again, 43 and 26, this is the same as up here, 43 and 26. The difference is up here we had $1,000 left to continue allocating out. Here, once we've done that allocation, we've allocated out 69,000, but there was only 50. So now we're over allocated 19,000. So now we need to reduce this. So we use the same percentage. It was still a 3-to-1, so it's still 3/4 or 75% goes to one partner, and 1/4 or 25% goes to the other partner. But it's what we're taking a percentage of that's different. We're taking 75% of the negative 19,000, which is negative 14,250, and we're taking 25% or 1/4 of negative 19,000, which is negative 4750. So whereas before we were adding to the 43,000, we're subtracting from it now and to get our new totals. So now because of this negative, we had the over allocation, we're getting rid of that, we're reducing it down. So we're reducing each partner's share of the profits so that we can only allocate out the 50. So again, you close your income summary, you debit, and then you credit each one of the partners' accounts with the respective amounts that we calculated here. Now, next scenario, what happens if there's a loss? So we looked at 70,000, then we looked at the allocation exceeds the profit, so we allocate out and then we reduce it because it exceeds the profits. What happens if we start off with a loss? Well, here we have a $6,000 loss, but we still do the same steps. We allocate out the salary allowances and we allocate out the interest allowances to get to here. Same as the prior two examples. So that means we've allocated 69. So we've added, because we have negative 69, we've added to our negative, which now we're at negative 75. Up here we started off with a positive amount, but we allocated out 69. So we had a negative 69, which left us with negative 19. What we're doing here is we're adding to the negative balance. Negative 69, negative 6, and now we have negative 75. And then we do the same steps that we did above. We take that negative 75,000 and we allocate it based on the 3-to-1 ratio. So 75% goes to one partner, 25% of that negative 75 goes to the other partner. And then those two add up, so now we were negative 75, but now we're reducing that to get to our 0, and this is the remaining allocation. So here we're closing at our income summary, but because it was a loss, it's a credit. And this partner, we credit their capital account, but this one has a negative amount, so we're going to debit their capital account. they explain I thought it was here somewhere. Oh, here it is. Partners are still allocated their portion of any salary or interest allowances earned during the year, further adding to the negative balance of the loss. This total negative balance after salary and interest allowances is then allocated based on the established ratios set forth in the partnership agreement. Same thing here, but we're just starting with a negative and adding to it. Okay, we'll do one more. Yep, we'll do this section here. So the statement of partners' equity. So if we look at it for the example that we're doing, in January 1 there was nothing because it was a new company. They both invested, so $30,000 and $10,000 show the total. They're allocated a share of the profits, and then we show the total. So now we can show their total capital, but then they both had a withdrawal during the year, so then you show the withdrawal along with the total to show the capital balance as of the end of the year. The balance sheet would look the same as a proprietorship, except under equity you would have two separate capital accounts. You show them individually. Alright, so we're going to stop there. I'll come back in the next video because we're at the mid-chapter demonstration. So work through that, and then the next video will pick up right after.